All right, in this video here, we have Durrett on, and Don has one of the best services, I believe, covering the gold stocks, the mining industry, silver stocks, and you can check out his program that he has to offer, which will be in the link right there down below. And we're going to have an interesting topic because we're going to get into the actual nuts and bolts and details of how to invest into gold stocks for someone that is new or you want to advance your knowledge in a deeper way. So welcome and thanks for joining us.
All right. Hey, Jake, thanks for having me on.
So why don't you start with what you were saying right before we went live? You were saying you wanted to cover the first basis of the different ways to invest in mining stocks right now.
Yeah. So the last podcast you did earlier this week, in the title, it talked that he was talking about some of the secrets that he had for investing. So I thought it would be a good opportunity for me to do a little teaching here on kind of the secrets of how I invest, how I analyze stocks. So people can pause this right now, get their pencils out and write and take some notes.
Awesome.
So what I'm going to do is I'm going to go over the three main categories investing. So we're going to start with exploration, then we'll do development and producers.
Okay.
I'm going to do basically hit the high points of what I look for when I invest in these categories. And then I'll do the risk reward of each of them. So hopefully we can get through it fairly quickly. So we're going to start with exploration stocks. So these are companies that have no plans to build or develop a mine. All they're doing is trying to find a mine or trying to de-risk a mine. And so for these stocks, ideally, you want to, I wrote these down ad hoc, my notes. So it's not in the order of the best, the most important to the worst. But the first thing I wrote down was market cap. So I think you want to avoid the really tiny micro caps. A lot of people like to invest in them, but the risk reward is really poor. So I think that the ideal way is to get a market cap for exploration after it gets to 20 million. So if it gets to 20 million, that means that they have a really good discovery hole, which is one of the things I'm going to talk about. And then after it gets above 100 million, your upside really goes down. So you don't want to invest in too many over 100 million unless it has a really good optionality feature to it. So that's kind of what you're looking for, kind of 20 to 100. Then the location. It's important, I think, one of the important things about the location is it in a mining district? So mining districts are usually where you find mines and usually where you find, large mines. And then also in the location, you want to see if they can drill year round. You got to, sometimes in the colder areas up north, the Finlands or the Northwest Territories in Canada, they can only drill for less than half of the year. So it costs more it takes a lot longer. And the other two for location is politics and permitting. You want to make sure that you don't have issues there. And then the next issue is the discovery hole. So I mentioned the discovery hole. So you want to find an exploration stock that has a really good discovery hole. So what is that? So if you multiply the meters by the grams per ton, you want it to be at least 50. And for underground, you want it to be at least 5 meters. And for, say, if it's silver, maybe 3 meters, because you can have really high grade. But ideally, you want it to be over 200. So if you multiply those two numbers together and you get 200, there you go. You got a discovery hole. Now you got something. So you find a company that has a discovery hole, they have market cap under 50 million, you can jump on that. And then if they have follow-up holes, you're kind of in business. So multiply those two. Over 100 is a really good hole. Over 50 is good. Over 100 is really good. Over 200, that's really kind of what you're looking for. The next thing is a good website. You really you want a company that's, they know what they're doing, but they're marketing their company too, and they're telling you what they're doing. So I always look at the website. For me, it's kind of it's not a deal breaker, but it's important. Then you have the people. Have they done this before? What do they have any big names? So I look at that. And then the last one for exploration is insiders. So if they have really small insiders, like to go over 25%. If they have if they have very low insiders, say less than 10%, or even, what happens is that the board are much more likely to sell the company. Whereas if you have more than 25%, the insiders will prevent that. They'll basically say, don't give this away. We're going to keep it. So
Understood.
So it's important. So those are the 6 big hitters for explorations that I look at. The next one, do you have any questions on that?
No, I'm with you. So we got explorers, and the next stage you said is developers.
Yeah.
Right?
So now we're going to do development companies. So the location is the same factors you're looking at. Then, the good management team. This one here is important that they've done it before, a good track record. And the better the track record for development, the more chances are that they're going to be able to build the mine quicker. Then the website. The thing about the website is you want them to constantly tell you what they're doing. You want them to show you. We want to see guidance. Exactly what are they going to do in the next year? How long is it going to take them to produce? Guidance is really critical, in my opinion. Then in insiders is actually more important than for exploration, because development companies tend to get taken out if it's a quality development project. So the higher your insiders, the less likely it's going to get taken out cheap. So 25% is kind of my cutoff, what I'm looking for. And then economics. So economics, you really want the IR, after-tax IRR to be above 25%. You can go a little bit lower than that. You can go down, I can go down as low as 15, but then it becomes more of an optionality play, because the reason why it has low economics is because it's uneconomic at $1,300 gold. So if you're over 25% at $1,300, it's more likely to get built quicker. You don't have to really depend on gold prices going up to get built. So you have a path to production. Then the MPV versus the CapEx. You look at the MPV and you want it to be lower than the CapEx, and significantly lower, because a bank is not going to finance a mine if the CapEx is higher than the MPV. So if you have a MPV of 200 million and you got a CapEx of 200 million, or CapEx of 250 million, that's not pretty. You really want MPV like 200 million and the CapEx of like 100 or 50. So that's, you always want to compare those two. And then the CapEx, you don't want it to be too big. You want them to be able to finance it. So once you get a CapEx, say over 200 million, then it starts to become an optionality play. Because the reason why the CapEx is high is they got gold or silver in the ground. So it starts to become an optionality. Ideally, I like to see a starter mine somewhere between 50 million and 200 million CapEx. That's a really good entry. We're talking about development companies. So these are companies that they're not producing and they haven't built a mine before. It's their first mine. So I like to see the first mine coming right out the gate, about 100, 150 million CapEx, and you're going to make your money on the second mine. So development stories a lot of times are kind of long-term plays. You want it to have a path to production, and you want it to be within, say, 3 years. Anything that's longer than 3 years, the risk really goes up. So if you have a path to production within 3 years, that starts to be very attractive, especially when it has good upside potential. So now this is one of my most important factors. So what you're looking at, so this is a development story. So you know what the future production is, you know what the costs are. So you can calculate what you think the future cash flow is going to be, future annual cash flow at a future gold price. Then you compare that to the current market cap. You want them to be about even. So let's say the current market cap is $100 million. Future cash flow is 100 million. So what does that tell you? That means in the future, once they start producing, they're going to be valued at about 5x, because most companies, generally all of your quality companies, are going to be valued at least 5x future free cash flow. And they're probably going to be valued at 10 or 15. So I price companies at 10, but when I'm looking at valuations, I usually look at 5 or 10. But that's what you're looking at. So that's the development side. Those are the kind of the high hitters that I look for. Do you have any questions on that, Jake?
No, let's go quickly to producers, and then I want to talk. And for someone listening, obviously he's going into a lot of depth of analysis. And so my personal philosophy as an investor is I have maybe 5 newsletters, programs that I subscribe to, and this is one where you're obviously going to get a bulk of analysis. So let's briefly talk about the benefits of having producers, and then I want to go into some of the other questions that I have. And obviously for someone listening, that this is obviously a nice taste. You're going to get a lot of in-depth analysis, but let's talk briefly producers, and I want to go to macro.
Okay, sounds good. So locations, again, one thing about a producer is you don't have to worry so much about permitting, but you have to worry about political change. So political change is really important for producers, any type of, most of them are third world countries, but it can be others. So management executions, you want to look at how they've executed, say, over the last 3 years or more. What kind of a track record does the management team have? And then you want to look at the balance sheet. So the balance sheet, one thing that you want to kind of avoid is companies that don't care about debt. So companies that perpetually have like 500 million or above, those companies, most of them are not going to have real big upside potential. So I'm always looking for like at least a 300% return. So I'm trying to avoid kind of high debt companies. And ideally, I'm looking for companies that are more cash focused. So when I say cash focused, that means that they're giving us guidance saying that they're going to pay down their debt. So they say that we know we have high debt and we're paying it down. So more of a cash focus. That's just a quickie on the balance sheet. So all-in cost. So on all-in cost, you're looking at the current all-in cost for kind of survivability. So I like to see a company when I say all-in cost, I'm not talking about AICS. I'm talking about break-even cost, all-in cost for break-even. So I always pad the AICS.
Don, let me ask you. So producer for the viewer, self-explanatory macro question on producers. For a long time, I just got lucky, I guess, because I got into gold and silver towards the end of this very long-standing bear market. But these companies were severely undervalued for the while since the crash after like 2011. And, it was tough going. A lot of them did take on a lot of debt. And one of those reasons is because the cost of the goods that they were mining had dropped so much. It was hard for a lot, especially in the silver space, for a lot of them to not only have any profit, but just to survive at all. And so now we've seen a pretty quick move in the price of silver and the price of gold, say since 2019, this time of the year, well before coronavirus, well before any of that. This time, 2019, I forget exactly, but I mean, it wasn't that long ago. We had $1,600 silver or gold, and then we had silver at, whatever, sub $20. Nobody cared about it. It wasn't a conversation. And then all of a sudden, you've had a pretty significant move in the price of gold and silver really since the turn of this year. A lot of that aided by, of course, the monetary policies that are happening. And the result of that is it's become more popular. You had Warren Buffett invest in it. And then it's just in general being talked about more, right? You have Robinhood traders, and then silver gets a nice a boost because the stocks are so small, so they move so much. So you get a lot of traders that flood in. And so it's just starting to be a conversation. You had, I think it was like the Chicago pension fund Chicago or Illinois, their pension fund put a 5% allocation of gold. So it's starting to happen, but the gold stocks and the silver stocks are still not super loved. And part of that may be because of the balance sheet still not factoring in these significant price moves over a sustained period of time. So my question to you is, for this revaluation to occur, in that catches big money interest to keep moving, and we really see that flood into mining stocks, how much of the attractiveness has been factored in from the all-in sustaining costs and the price jump? And what do you think we need to get that next level where we continue to see that attractiveness? Because monitoring my YouTube channel and stuff like that, it seems to be a comment and a question a lot of people have. So where do you think we are in that?
You just froze. So, yeah, it just says internet. Okay, now we're back. We just had a little internet issue. So you might, but I think that question, I got the question. It only froze at the very end of the question. So what I've been talking about prior to this run up was, how much does it cost? What are the costs or the price of gold and silver for the industries to be healthy? And so I talked about we needed to get to at least $1,600 gold for the industry to be healthy, if you will. So anything with gold under 1,600, I didn't think it was healthy. And even 1,600 was really kind of borderline. And then for silver, I had it at 1,850 to be healthy. So we've only been healthy in silver for a month now.
Uh,
And so people are a little bit nervous looking back at 2011, because what happened in 2011 was the price of gold and silver, they spiked in 2011, but they didn't stay there. They started correcting fairly quickly. And people are a little nervous that the same thing could happen again. So they want basically prove it. So for me, I think that even though we're kind of healthy right now, the industry's healthy, especially silver at $23. But if silver, even I say 1850 is healthy for silver miners, there are quite a few silver miners that are just barely making money at 1850, and there are silver miners losing money at 1850. It's really higher than that. I mean, for true health, it's about $22, $23. I mean, if you look at Endeavor Silver, for instance, I mean, their costs are starting to come down, but their costs have been pretty high. And they're one of the mainstays. If Endeavor isn't making money, then, that's not good. And so the overall investing environment hasn't flipped yet. Like you said, when is it going to flip? So for me, I think it's going to be over $2,000 gold for about 4 to 6 months. And it's going to have to trend up too. It's going to stay above it. But when you're at $2,000 gold, right now, the all-in cost, the break-in cost in the average producer is under $1,400. And most of them, the really quality ones, are under $1,200. So you're looking at anywhere from $500 to $700 margins, which is really high. So if you keep that going, it takes a couple quarters. So after you get a couple quarters, when these companies start reporting, their balance sheets start cleaning up. And one of the keys here is the balance sheets. Remember I said a lot of these companies, they like to have 500 million plus on their debt on their balance sheet.
Right.
Well, those balance sheets start cleaning up really quickly when they have all of this cash flow. So that will drive investors. And so that's for gold. Gold is over 2,000, say, for 4 to 6 months. For silver, I think we have to get over 30.
Okay.
So nobody's going to trust silver. So the old high was 29.75, something like that. So people are going to want to see a new high in silver. They're going to want to get over 30. So if we get over 30, I think the retail market comes in, especially for physical. And I think that the silver miners really start flying around $35 silver. And if you look at the chart, 26, 27 was really the last line in the sand. Once you got over 1850, I've been saying this, once you get over 1850 in silver, there's really no stopping silver from going to an all-time high, except for the economy doing really well. So if the economy does really well, then people are going to avoid gold and they'll avoid silver and they won't do it. But I don't see the economy blasting off here in 2021. So after 1850, you only have two places where it's going to pause. One is at 26, 27, which is where we're pausing right now, which is I expected. And the next one's 35. But the problem with 35 is that it's the last line in the sand. So there's going to be a magnet. Once you get to 35, everybody's going to see that all-time high, and they're going to see that $15 move. It's $15 from 35 to 50. That's a big move. And investors are going to see that, and they're going to see that there's no resistance. And so there's just nothing going to stop it. It's just going to start moving. So that's when the flip happens. So we're going to see the flip happen, when those two events happen, over 30 and then over 2,000 for 4 to 6 months.
Okay. So I have, out of all my money invested, I gotta be 80-20 silver, not only between my mining stocks, but physical too. So definitely that caught my attention. So what do you think we need to get then $35 silver? Do we need another stimulus to be passed? What do you believe needs to happen for us to continue to have that upward trajectory and then take out that 29.75 that you said we hit maybe a month ago or whenever that was in like August?
So I've basically been studying economics since 1980. And so I lived through when Reagan, so I'm 60 years old. So I was 20 in 1980. So I was old enough to understand exactly, and I was going to college. I understood exactly what Reagan did when he started supply side economics. And what people don't realize is that what Reagan put in motion with supply side economics is still with us. It has not changed. All supply side economics is that we are going to support business. We're going to support the suppliers, the corporations, and the small business. We're going to support them and make them strong. So if you make the suppliers strong, you make the economy strong. You make the corporations strong, you make the economy strong. So Reagan, he brought in globalism. He started talking about, international trade, reducing trade barriers. That followed over into the 90s where they continued. Globalism started continuing. Our technology blasted off. And we got globalism on a mass scale. But there are ramifications from that. So we've been in a supply side economic system since 1980. Well, Reagan didn't really put it in play until 82, for instance. It took him a couple of years. But once it was in play, that has ramifications. And those ramifications help gold and silver immensely. And you have to understand that supply side economics, that's not what we had in the 1970s and 1960s.
Yeah, but how does it help gold and silver?
Okay, so the way it helps gold and silver is that the United States, it's kind of deep, and that's why nobody talks about it. The reason why it helps it is that supply side economics is a top-down economic system. It doesn't really care about the middle class or the consumer. Okay. The only thing it cares about is the producer. So what has happened is that the corporation has gotten too strong. And it's gotten too strong. For instance, right now, Amazon doesn't pay taxes. There's a reason for that. That came out of supply side economics. We are going to support the corporation. If you remember the early years of Trump, he said some negative things about the technology companies. But boy, he fell in line, didn't he? He basically got in line with supply side economics, and Trump is basically, all about that now. So now we're starting to see a swing. And that swing, and this is where it helps gold. That swing is that, wait a minute, and this is coming from the left, is that we can no longer allow corporations to have zero taxes. And so if they start raising taxes on corporation, corporations are also small business. All a corporation is how you incorporate your business. All small businesses are basically corporations. It just depends, how they're actually set up. But what's going to happen now right now going through this decade is that an MMT is basically part of this, is making sure that the corporation doesn't fail. Look, they're trying to bail out the airlines. Notice that both parties are doing it. But the Democratic Party, if you go back to Clinton and Obama, they were basically supply siders. I mean, Obama never went after the corporations, and Clinton surely didn't go after them. But now the left part of the party is going, wait a minute. The progressives, Bernie basically opened this up in 2016, and now supply side economics is threatened, and it's going to change. So and we're not even talking about the monetary system as well, which is also impacted the U.S. dollar, but supply side economics and debt going up too high is we're going to transition, and as we transition, the transition is not going to be pretty. It has to be messy. So basically, through that messiness, you're going to have, basically when the corporation is impacted, the economy is impacted. When the economy is impacted, gold goes up. Gold is basically a hedge against strong economics. So I started investing in gold in 1991 because I could see the writing on the wall. I could see what supply side economics, where it was leading us. And we're there now.
So, yeah, interesting. And then supply side economics, I guess that kind of goes in. You said support the corporations, which means support equity prices, which means load the companies up with that, which means print the money, make sure the companies keep producing, keep growing, stock shares keep going, which hurts the currency, which helps gold and silver. So understood. So when you say
let me interrupt one thing. I want to mention this because some people are going, what's he talking about? Let me give you a really good example. Buybacks. Notice how corporations have been buying back their stock left and right. For instance, the airlines, they've been spending the majority of their cash flow on buybacks, and they get away with it because there's no public outrage. And the reason why there's no public outrage is because of our economic system. Our economic system says corporations can do whatever they want. That's the American way. But in actuality, it has ramifications. Now, the people, taxpayers, are having to bail out the airlines. That's just one example of supply side economics going too far, and now it's going to get kind of reined in, if you will.
So then what do you see unfolding here? We kind of the other day, Trump said no more stimulus talks. And then the other day he said, back on. We got the election coming up. We've got, still a lot of places that are shut down or are getting re-shut down. I mean, in Europe, it's a lot worse. In Australia, seems like it's pretty bad from what I've seen in Australia. So you still got a lot of people, not only unemployed, but a lot more small business owners that are probably going to lose their life savings again because of a second wave of shutdowns. So we're still in this weird limbo where like the regulatory effects of the lockdowns and the saving people, quote unquote, is, still has a second wave of ruining a lot of people's lives, and people are going to lose. So we're in this weird limbo. What do you think the next 2021, 2022 looks like? Do you think that people talk about digital dollar? You talked about, we're seeing changes and we're seeing shifts. What do you see the next year or two looks like? Is it slowly open things back up and give everyone money on digital wallets to make them start spending to try to stimulate the economy? And this just goes the total Japan mode. Nobody knows, but I'm infatuated by discussing the future and talking to really critical thinkers like yourself on the topic. So how do you see this unfolding based off of this precarious situation we're in right now in the world?
Well, this is kind of my bread and butter. So I've been focusing on this. Where is the economy leading? Where are we going? So I've been doing this forever, if you will. So if you look at MMT has changed basically the way we look at government intervention. So prior to, say, 1990, we would never even think about doing this type of money printing. Mm-hmm. But the Japanese, they invented MMT. They basically said, we told them that they needed to write off their assets. And they basically said, we'll do it our way. And so they basically their central bank started increasing their balance sheet. And they found that if you spend money on buying out debt, or it doesn't necessarily cause inflation. It doesn't cause inflation. As a matter of fact, it caused deflation. So Japan hasn't had inflation since 1990, and they've had their balance sheet's huge. So their MMT appears to have worked. So in 2001, after we had our recession and then 9/11 hit, we emulated what Japan did. We basically said, well, we can print money, increase our balance sheet, and we can bail out companies, and it won't cause inflation. And it hasn't yet. But one thing that you get with MMT, when the velocity of money picks up, that's when you get inflation. So what's happening now during the COVID is now we're starting to send people money. When you send people money, the velocity starts to speed up. And so now I think we're going to continue to see more MMT. We're going to see the balance sheet, the Fed's balance sheet expand. We're going to see the U.S. government's debt expand. What's it, 28 trillion? And we're getting to the point now where things are getting kind of dicey, if you will. So the US dollar, in my opinion, is going to drop. We're looking right now, we'll see if it gets over 95 between now and the end of the year. If it doesn't make a run, right now it's kind of stuck. It bounced off the resistance of 92 and it went to 95. The US dollar is critical here. That's really important for the US economy. It's really important for gold, of course. But I think that next year that we're going to see, once gold gets below 92, it should go down to, say, 85. And then once it gets to 85, you're going to see a lot of nervous people. And that's really when things are going to get kind of dicey. I think we're going to go into another recession next year. And I think that we're going to see a lot of stimulus. I think that inflation is going to trend higher. But I don't think we're going to have a depression. I don't think we're going to have a crash. I think we're going to see unemployment rates rise. I think we're going to see high unemployment. But the good news is technology is going to bail us out to a large extent. Technology is going to allow innovation, is going to allow jobs, is going to allow the prevention, if you will, of a total collapse. But we're still going to muddle along, and there's going to be a lot of uncertainty, and gold prices are going to go higher. I don't know how much higher, but higher. That's my feeling. But I think we're in this decade is all about transition. I talked about supply side economics basically hitting a wall, and that in the U.S., they're not going to allow it much longer. The left isn't going to allow it much longer. They're basically going to start to attack, and that's going to slow down our growth. You're going to see higher taxes, which is going to slow down our growth. And so that's what I'm seeing. But overall, I'm very bullish for gold, say the next 2 years.
Okay, there's a few questions that I had. I'm trying to pick there. Yeah, it was really interesting. So you said that you think after the election, you think that the dollar will continue to move down. Then you said it'll be good for gold, but then you said you think we're going to have another recession. So when you say recession, you also said that when you described it while also saying that there would be a lot of monetary stimulus during that period and such. So do you think when you say recession, we have a next wave where everything sells off again? Because I get a lot of people that write and they're like, well, what's going to happen to gold if we go into another recession? Everything sells off again. So in a situation like that, do you see gold dropping again? Or how do you see that for someone that says, well, then is it a bad investment right now?
Yeah, great question. One thing about the dollar, I think the dollar after the election could still go a little higher. I said this year, so the number I'm looking at for this year is 95. If it stays under 95, I think the dollar's in trouble for next year. But yes, okay, so sell off. So I've been trying to tell people that we're still in a correction. The correction started in September, which I said was going to happen. So we had this correction, and now we're seeing if the correction's over. I think if we were in January, I would say it's over. Yeah, but we are in October. October, November, December are not good years for gold and silver. Not months, good months for gold and silver. If you go back to 2016, the fourth quarter, the only time it was good was last year. And the reason why it was good last year is because we basically had a crash in August and September in gold. And so then it started coming back up in October, November. But it's not a great time. This is not a great time for gold and silver. So I'm expecting us to go lower, but not a lot lower. For me, I think it's going to, for instance, silver, I think is going to probably find a bottom here somewhere 2120. The worst I think is 1850, but I think 1850 is going to hold. So we're not looking at a big crash in gold and silver right now. And then once we get to next year, in January of next year, now of course I'm just guessing. This is my projections. The last few years, January has been great for gold. I'm expecting it to be great for gold again this year. So I'm expecting gold to make a run late December, January, and go over 2,000. Now, depending on how high gold gets, if the stock market crashes, now I could be wrong about this, I think that is going to put a bit of a floor under gold, because I think you're going to see a lot more money go into gold and silver. And the more money that goes in, I think you're going to start to see what I call the fear trade. The only reason why gold's going over 2,000 is because of what I call the fear trade. People are buying gold as a hedge. People are nervous and they say, I want some gold. I read last week where somebody who had never bought gold in his life bought gold, a billionaire. He bought gold for the first time ever in his life. So I see more of that. I see more money going into gold. And so as that happens, I'm hoping that it puts a bit of a floor under gold so that when the stock market does crash next year, which I expect, that the miners don't go. I'm hoping that the HUI, which is currently about 320, 330, I'm hoping that it doesn't go below 250, and I'm hoping 275. So yeah, it could get nasty. But 250, that wouldn't be a terrible bottom because we were at 150, right? If we go down from 330 to 250 on the HUI, I can live with that because I think we're going to bounce off it fairly quickly. Ideally, I would like to see the HUI hold at 300 next year in 2021, but I don't think it will. So yes, there's going to be dips. There's going to be buying opportunities next year, I think. And I think that the stock market's going to retest 18,000. The Dow's going to retest, next year is going to retest 18,000.
So a lot of people across the board, investors, whether they're mainstream billionaire guys or they're people that talk about gold, seems like everybody feels a little bit like Wall Street and Main Street might have some catching up to do. So, and as a result of that, whether there's a Democrat or a Republican in office in 2021, my feeling is that to get this going, that's when the MMT pedal, so to speak, is really going to hit the floor. And that's when we might see a lot more of these monetary measures that really might be the wind in gold's sail, that this might we still might be in like the first or second inning, and that this could really make for a nice run, over the next few years. Where do you think that it has the potential to go, and how long of an investment is this for you, knowing that it is cyclical, especially as it comes to the miners?
I've been using the same analogy in my newsletter, that the wind is at gold's back right now. So we were in a 6-year trough. For both gold and silver, if you look at their charts, they're basically stuck in a trough, in a channel for 6 years. That's a long base. So now that we've got out of that base, in my opinion, it's unlikely to go back in that base without some type of a run. And I'm hoping, so the base for gold is 1370, and we're at 1900. It's got to go a long ways down to get back in that channel.
Yeah, I can't see that.
And so I don't see it happening either. So I agree with you. The wind's at the back of gold right now. We're going to see a run. I think for me, the minimum target for me is 2,500, and I'm feeling more and more as if that is just really the beginning. I don't know. I can't really project much further than 2,500, other than I think that 2,500 is a real conservative target. But if we do hit 2,500 in gold, the miners are going to do extremely well. You're looking at the majors at least doubling. If we go to 2,500, they're going to double. That's 100% return. That could happen next year.
You're saying the majors would double at 2,500?
Yeah, the majors would double at 2,500.
So that means juniors might 4x or 5x at that, or maybe some may even 10x that, a couple of those random ones.
Yeah, you're going to see some really, really big returns.
And you're saying at 2,500 that would happen?
Based on our minimum target, my minimum targets, we're going to see a really nice gold bull market here in 2021 is my expectations. So the ideal entry, was when we got out of that channel. So 1370, that's when you want, $1,400 gold is when you wanted to get in. And then silver, it was $19, $18.50. That's when you wanted to get in. So people are a little late to the game right now. So the miners aren't super cheap. And so, if you buy right now, like I said, the HUI is at 330. I think it's going to come back to, if it comes back to 300, that's a 10% loss. 10% is nothing in miners. Usually you drop in a correction, you can drop 40% fairly quickly.
Yeah, we just did in March. I had some that were down well over 50.
Yeah, so people that are kind of late, that don't own miners want to get in. They're probably going to catch a little bit of a falling knife here before we start to see this big run up.
Okay, so then you think we still have more we've been in this pattern since gold crossed 2,000. And then since silver hit 29, we've been kind of in this thing where silver is like, some days it is up 80 cents and it's back to 25. And then the next day it's back to 22. And gold's, I think, at the high 1800s now. So you think there's going to be a further bottom, is what your personal opinion is? Yeah, we got 2 waves coming. The first one is going to happen before the end of the year. So, and I think it's going to happen in November. I think we're going to see a wave lower.
Yeah, we're going to get a wave lower here before we go higher, before we get to $30 silver, if you will. I don't think it's going to trend all the way to 30 right now without going lower. I could be wrong, of course, but that's my expectation. I just think that people are starting to get nervous around the dollar, around MMT, around our democratic process, kind of starting to attack the corporations a little bit more. By the way, I think that Biden's going to be great for gold if he wins, and he's a big lead right now. I think gold's going to the moon if Biden gets in. So, and I was nervous when Trump won. I thought, oh no, gold's going lower. And sure enough, gold didn't do anything after. but going back to the sell-offs. So first wave here before the end of the year, we go a little bit lower. I don't think we go to 1850. But I think 2021, 22, I think we're going to go a little lower here. with a possibility of going down and retesting 1850, depending on how much the stock market crashes.
Is this on your personal opinion that we won't get another round of stimulus before the election? If they
even if we get it, I
still think we'd go
probably
lower?
will. It's not going to help, right? Especially because I actually think Biden's going to win because of the numbers that I'm seeing. And so that's one of the reasons why I think November, after he wins, I think people are going to have second thoughts about a Biden administration as far as pulling this economy out. So I think we're going to see lower in November. So that's this year. And then I think we start running in January. And then sometime in next year, we have a crash in the stock market. And we have a crash in the stock market. That's when you're going to really get these, the bull's basically going to shake people off. The bull's going to buck people off next year at a certain point. I don't think we're basically going to just start running in January and run the whole year. At some point next year, we're going to get a big correction, in my opinion.
Interesting.
And then I think that's the last one. And then we blast off. Then we hit the $50 silver.
So how long is, in your time frame, the rally? People say, when do you sell? When do you sell? Rick Rule told me that it's positive interest rates, positive real interest rates is when he would consider, or when the global savings denominated in gold reaches like 2% or something like that. But his most important measure was positive interest rates.
Right.
Do you have any measures? Is there a time frame? Is there a price that you're selling at? What does that look like for you?
Yeah, great question. Absolutely fantastic question. So now we have basically three things that we can look at, right, for when to get out. One was what Rick Rule said, look for positive interest rates. That's going to be a sign.
Okay.
But it might not be the final sign. The other one is the Dow Gold Ratio. So back in 1980, it went 1-to-1. 800.
What's it now?
Oh, gosh. I think like 17.
17 to 1.
1,800 to 30,000, 20. Yeah. Somewhere around there. 17. That's off the top of my head.
So high teens to 1. Okay.
But we want to go, for me, you want us to keep an eye on it. So once it gets under 3-to-1, that's when you start to pay attention. 3-to-1. So let's say that the Dow goes to 15,000 and gold goes to 5,000. At that point, you're at 3-to-1. Gold, and so once it goes to 2-to-1, I think that's when I'll get out. If it goes 3-to-1, I might get out. 2-to-1, I'll probably get out. I'm not going to get greedy and go all the way to 1-to-1. So the Dow Gold Ratio, that's number 2. Number 3 is basically when you just are sitting on a boatload of profits. So if gold goes to 5,000 and you're just, let's just get out and your miners. So for me, I think silver is more, I can talk about silver more about getting out because my exit strategy is actually more around getting out of my silver because I think silver has higher risk than gold because gold basically doesn't have any counterparty risk and gold, 80% of gold is basically all investment gold. Whereas it's the opposite. Silver is dependent on the economy. It's 80% of silver is basically goes into fabrication. The other thing I'm nervous about is silver becoming a strategic metal. I think that once silver gets over, say, $100, I think governments are going to have incentive to call silver a strategic metal because it's going to be costing corporations money to build stuff. And corporations are going to go, hey, we can't afford these silver prices. Plus, we're having trouble with supply.
So do you think they do a price control then, or they buy out the mines?
There's lots of things they can do, and I think they'll do some of them. One would basically make ETFs illegal. You do that, you dump 300 million ounces or more out into the market, and it crashes the price of silver. Second thing they do is they make it illegal for consumers to buy bars. So you can no longer buy silver bars. Oh, we'll let you buy sovereign coins, but that's not going to drive the price up. And so I think they'll do, that's two things. The other thing is they basically could make high taxes for owning silver, stuff like that. But I think silver, because it's such a strategic metal, has high risk. Now, where am I getting out? So for me, my first sell point is really like $40 silver. And then every time it goes up $10, so it goes 50, 60, 70, 80. Every time it goes up $10, at that point, I'm going to look at my silver miners and see how much profit I have in them. and takes them off the table. Now, I'm only going to take off 50 or 75%. You don't want to take all of it off. If you leave 25% on the table, that 25%, if silver goes to 300, will have more returns than your first sell. So keep 25%. Just keep it. It's going to be worth it. And then you can always sell that 25% later, but I'm saying way later. I'm talking $150 silver. So I sell a little bit, it's up 50 to 75, every $10. And then once silver gets to 150, I should be out about 75%. And at $150 silver, I'll probably sell my physical. We'll see.
Interesting. So you wouldn't, your denomination of your precious metals portfolio that is in physical, you won't sell any silver physical. You won't even think about it. You're saying till 150. That stuff's off the table when you are not selling your physical silver unless it goes to $100 plus.
That's correct. Although paper silver I will sell earlier.
Right, understood.
So I have some SLV and some PSLV, and my SLV I don't really trust that much. So I will sell my SLV at $75 silver.
Okay.
And my PSLV, I might sell it at 100.
So that's one thing that I've thought about too. You know, I have a high percentage of my portfolio in physical as well. And then I think, you know, my mining, I have so much physical in gold and silver that I'm like, my mining, I'm like, let's see how, if the stories are so good, let's see how, I mean, maybe I could turn this into a lot of money in that. I sell that sooner. I can roll that into, you know, having some epic farm and have everything in cash, and I'm set for the rest of my life and I never have to look at a computer again. And if I could do that all without selling my physical, I've said to my wife, I was like, I would feel so good about myself, you know? And then I'm like, well, when would I sell physical? And I've been like, is it 100? The guy I buy most of mine, so he's like, 300. You don't want to sell that till 300. So you personally, and that sounds like an absurd thing to say to almost anybody, but you personally think that silver will see that 3-digit?
Absolutely. I have no doubts. All you have to do is do some research on the supply of silver above ground. Right now, there's on a dollar basis, if somebody wanted, one billionaire could buy all the physical silver above ground, one guy, no problem.
If I was a billionaire, I would totally corner the market.
You could. You really could.
I would.
All you'd have to do is start, just go to the COMEX and just start buying contracts and just start taking physical in. They'd be out of silver very quickly if you were a billionaire and you started doing that.
I asked Jim Rickards that in an interview, and Jim Rickards said, well, do you want to be the responsible for the person that crashes the financial system? And I said, well, maybe if it made a better one afterwards.
So I wanted to say something. You mentioned something about selling your silver miners at a real high valuation. One thing that people don't realize is that when you get a mania phase, which is what I think we're going to have, you get some crazy valuations. If you look back in the 1990s and you look at the valuations that some of these internet stocks were getting, 100 times cash flow, 200 times cash flow. Most of your producers right now are getting, the really strong ones are getting, really, really strong majors are getting valued like 15x, 20x free cash flow. Well, you're going to see juniors in this mania get valued at 30 times free cash flow. That's and then you look at what the cash flow is going to be. We're going to see some really unbelievable returns on some of these juniors.
Yeah, it's exciting. Sometimes it's, and I put so much content out on this channel, sometimes you get the trolls and just people don't understand it, especially because a lot of people's indoctrination into precious metals has really been after 2011, It never really goes up and it comes back down. No one reads it. And so you get that. But then I look around at people. And so here's a few things I've noticed to illustrate why I think there's a very clear adoption curve of it. So we'll take number one. I've interviewed more people that are from other industries than usual, people that have made a lot of money in the cannabis industry. I'm talking billion-dollar executives in the cannabis industry, and numerous other industries that were not gold and silver industries. Maybe they were in it back in the day. And in many instances, they haven't been in it yet. And they just said, wow, this is going to be huge. I'm going to put a team together, put all the people that know what they're doing, and I'll just bring the money together and go raise a bunch. And so you've seen that. So you've seen people that maybe they aren't gold and silver nerds, but they're like, wow, this is going to be big. Then my mom's boyfriend, he's a retired now, like wealth manager, and smart guy, did well, was never particularly interested in gold and silver. Before coronavirus, he had a 0% allocation. And I had been talking to my mom and my dad about, my dad's the one who taught me about this and was so into it, but my mom and her boyfriend were not at all. Now he's got at least 15% allocation, in a multi 7-figure portfolio. And that's in, what is it? It's 10 months, from zero to that. So it seems like people are really waking up and more mainstream because of, you just look at the balance sheet. Warren Buffett, he doesn't care about his bias. He's just like, wow, what this is trading at based off of the financials compared to other industries, whether it's a soda pop or it's whatever, it doesn't matter. So would you say there are any other indicators to you that this market is warming up and this time it is for real?
Yeah. I'm making a note here. First, I wanted to mention two things about Buffett's investment. So he invested $500 million in Barrick. His expectation is basically to get 100% return somewhere in that vicinity, say in the next 2 years. It's a smart bet. I think Buffett is making a really smart bet. He's probably going to double. He's going to make $500 million in 12 to 24 months, probably 12 months. So that I want to say that. Also, when gold and silver prices explode, and we're going to talk about the indicators next, when they do explode, who benefits the most? It's the producers, because the producers, every dollar that goes up in the price, it goes right to their bottom line. It improves their balance sheet, strengthens their company. Versus if you're a development company, yeah, makes you a little bit more valuable because your project becomes a little more valuable, but it doesn't have as much leverage. And if you're an exploration company that doesn't have a property, that you're not drilling out a mine, it doesn't help you at all. So if you're allocated to some exploration stocks that don't have a find and they're not drilling out a mine, you're not going to benefit at all. So you make sure that you have allocation to the producers, because if gold goes from 2,000 to 3,000, the producers are going to fly, and those are the ones that are going to get these overvaluations. So back to your indicator. So indicator number one, for me, is that technical chart. The technical chart just screams, a nice move, right? That's number one. Number two is MMT. So MMT is basically creating this really bizarre economic policy that says that debt doesn't matter. And it says that interest rates are going to be low forever, and we can always pay. We have enough money to finance our debt. But if inflation goes up, wow, what happens? We can no longer finance our debt. We're bankrupt. So you have this MMT issue here that's hanging over our head. And I think people are going to pull money out of the United States and the dollar's going to drop. When the stock market's going to go down this year, I think, and when it goes down, you have money pulled out. And I think you're going to see real estate drop. You're going to see business valuations drop because they drop with the stock market, more money pull out. And I think you're going to see the dollar, like I said, I'm predicting sub 85 by the end of the year. So those are the three biggest factors, I think.
Interesting. So kind of to wrap up here, why don't you share with everybody a little bit about your analysis that you have for those that found this very detailed and very interesting. Obviously, you're a bright guy that definitely right. I'd call you a mining stock nerd. So for those that want a mining stock nerd in their corner to help grow their wealth, why don't you share a little bit about your offering?
So one thing, if you're my book, so I wrote a book. It's probably the only book out there that teaches you how to invest in junior miners, but it's basically it's a textbook. It's how to invest in gold and silver. So You can go to Amazon and read the reviews. Or if you're a member of my website, Gold Stock Data, you get it free in a digital. So you sign up today, you're going to get a free digital book. And so you can learn a lot about how to analyze stocks reading that book. So,
awesome. So we'll put the link in.
Thanks for having me on. I really appreciate the conversation.
Yeah, we'll have to do another one and talk more about silver. That was what really interests me. I'd love to talk more. I mean, that's where I have most of my money. I'm sure people would love to hear. When we do a new episode, we'll do an exclusive silver one. So for everyone listening,
let's do it again.
Yeah, so for everyone listening, you'll see the link down below. And we appreciate you listening. Make sure you hit the like button on either side. If you want to see another episode, leave your questions down below that you have for Don. Or if you want to hear it just about silver, leave your questions down below and we'll pull them for when we do a next appearance. So make sure you hit the like button, leave a comment, and be sure to check out Don's offering on his analysis on gold stocks.